So I guess we can start. So welcome to the Fireside chat. Thank you for doing this, Matt.
Happy to do it. Had a lot of
Yeah.
had a lot of fun. I'd never really worked on helium markets until starting maybe last November, December, and so this has been this is kind of the culmination of about 7 months of work at this point in time, and it's been a really interesting kind of vertical to get those. It's really difficult to get information on, just in general.
Yeah, we noticed that on Discord that there's not much chatter because it's hard to find information, right?
Yeah, that's right. I mean, there aren't like published helium prices. There aren't. Most of this is done. Me by trade. I'm a coal analyst by trade. That's where I started off. But that's the way the coal industry used to be. A lot of the supply agreements were done on these annual contracts, and that was done with a handshake and a paper contract, and nobody ever talked to the public about anything, whether you were publicly traded or not. So.
We lost you. How about
over the years for a lot of these kind of?
Why don't we turn off your video for a minute and try it that way for a sec?
Am I breaking up?
Yeah.
All right. So, I don't know where it broke up there, but in general, a lot of these markets that used to be sort of more opaque over the years have opened up. Helium's really one of the ones that hasn't, and I think a lot of why that has to do with is just kind of the nature of the demand verticals, right? Aerospace, defense is kind of they don't want you to know much about what goes into that, I would figure. And similarly, like biotech and MRI machines, semiconductor manufacturing. It's not, individually for those verticals, it's not a huge cost component. So, they're not really, they don't have any interest either. So, whereas I think a lot of times we might be able to get information from, consumers here, just not the case. So you got to go find it yourself.
Yeah. So I guess maybe a good lead-off point would be if you want to explain how it is that you got into this, and
Sure.
I guess your relationship with Total Helium, because I know that you did go and see them. Is that right?
Yep. I went back in April to go visit the operation. So how this came about, I guess for me, first off, I've been a commodity analyst for commodity markets analyst for coming up on 2 decades now. I started off on the coal side doing cost estimates and production estimates for Central Appalachian Coal for this big global consultancy, Wood Mackenzie. And then over the years, Wood Mackenzie eventually acquired a metals consultancy called Brook Hunt in England, and they wanted to expand coverage into other verticals. So they wanted to build an iron ore and steel service, and I volunteered to build that for them. And that's kind of where I started getting interested in, learning all of the different verticals in metals and mining. And then the other thing is, once you get kind of to the top of one of those food chains, steel, for instance, consumes coal. It consumes iron ore. It consumes shipping, right? So I have to be aware of shipping rates. And then if you look downstream from steel, like what it's used in, well, it's used in the auto sector, right? It's used as it's part of the drilling and completion cost for oil and gas. So once I kind of got into cross commodity analysis and supply chain analysis, that's really where I thought the rubber met the road. So from there I went on to do base metals and precious metals under the working alongside a financial publisher and Sprott, which is a company you may know. But we did, I covered everything. I covered base metals, precious metals. I covered battery raw materials. I covered the uranium market. I covered, cobalt, and some other really esoteric sort of, metals and mining operations like that. And I was working in conjunction at that time with either financial publishers or with companies themselves, or or with other sort of industrial research houses and stuff like that. And that's how I kind of came into doing this. So one of my close friends and business contacts runs it's basically a networking company. They place companies that are, either have recently gone public or looking to go public with analysts to kind of support their, material for that they use in a lot of different ways for investor relations or for, in company decks, to kind of get information together for media training on down the line, like those kinds of things. And so the first one that was brought to me, the first one that he brought to me at the end of last year, happened to be Total Helium. A long time ago, this was like 2019. I remember wanting to write a piece on the helium shortage that was kind of coming into the market back then, which I think was helium shortage 2.0, basically, or 3.0. Can't remember which one. So anyway, so I took the call and I met Robert, and quite frankly, Robert's one of the nicest guys I've ever met. He's a serially successful entrepreneur. Like when he was telling me about his background, it struck me as somebody that I wouldn't mind digging deeper on. So during that process, the main publisher that I was contracting with, they downsized a whole wing of their operations. The main client was sort of gone, and Robert suggested, well, why don't you just finish the report that I was working on to be part of it was part of a tech service that I was writing at the time. Mm-hmm. And then Robert suggested, why don't we just finish doing the work, and they can use it for investor relations purposes or for other purposes on down the road. And so that's how that went across. So my friend's networking company basically they contracted me to write wound up being about 20-page report on Total Helium, and I got to do this analysis, and that's part of what led me to my next 3 or 4 clients just out of that group of folks.
Nice. And so we don't want to get it too much into Recon Africa, but you do work for Recon Africa, and you do have a hand in Total Helium. And so do you want to just kind of expand on that for everybody so that they know exactly what is going on?
Sure. So how the two companies are connected is that a long time ago, say back in I want to say 2010, 2011, Craig Steinke, who founded Recon Africa, had a company, Realm Energy, which had been taken through to acquisition, I think. Part of what they were trying to do was to crack the shale code, I believe, in Europe at the time. And I wasn't even close to being an oil and gas analyst back then, so this is just me dusting off cobwebs from talking to other people about it. So Robert was an investor in Realm, and that's how Robert and Craig met. But they've been friends or close ever since. I can't remember if Robert was on his board of directors or something like that. But that's the connection between the two companies, basically. So they've been working together on and off for the better part of a decade. So whenever one is sort of doing something, they're one of the first people that they contact. Close friends and all. That's pretty much a story. It's pretty boring.
Friends do that, right?
Yeah, that's right. I mean, especially when you have an operation that you think is going to do real well, like the first sort of investors that you want to go get are, friends and family who can understand the complexity of the project and can understand your ability to get it done. And honestly, I wrote a private market service for a long time. Those are that's one of the factors that I like to see when I'm sitting down with a company. Like, are there other people with skin in the game who are close to them? And, are they just as committed and supportive? Is there more capital to go get if you need to do a raise, those sorts of things. Here, for Total Helium, it's not really necessary because they're being funded by Mindy, but yeah, those are generally, I think a pretty positive attribute personally.
Well, from what I understand, Robert, I mean, you touched base on it, but Robert's such a nice guy that everybody wants to work with him, and he's quite successsul at what he does, right?
Yeah, that's kind of what Robert really brings to the table. He understands certainly his company backwards and forwards, but when I started asking him about his background, it was just like he's basically been putting together this skill set and this company for a long time. He just didn't know necessarily that he was that this was the end point, right? So yeah. I think Robert started off in I think it was the oil and gas trust energy department, maybe of it's like First National Bank of Tulsa, which is now I think part of J.P. Morgan Chase. But Robert started there fresh out of law school. And so he was looking at production, mineral rights, assets, and those sorts of things. And across the street, so this is going back into the 1980s, but across the street was a sort of environmental geology company that was either headed up or one of the higher ups there was Glenn Timpson, who's now the kind of the chief geologist behind Total Helium. So they eventually formed a company called Brooks Energy in the early 90s. And they did kind of wildcat stuff, right? They explored for oil and gas and helium across, a whole bunch of projects in Oklahoma, Kansas, North Dakota. So, this is kind of Robert's roots. Total Helium is kind of where he started, doing this kind of work. But from there, he kind of veered off. I think he acquired a natural gas compressor manufacturing company, and he improved the unit production, and then eventually he sold that to Argonaut Private Equity. And Argonaut is run by a billionaire guy from Tulsa, George Kaiser, whom I assume that Robert had met during his term at the bank or whatever. So then you start to get these like series of businesses that Robert was involved in, kind of feeding off of that acquisition. So he acquired Ford's glass division in 2007, forming a company called Zelodyne, and he streamlined that business and eventually exited by selling the components to I think Carlex Glass, which is the U.S. operating unit of Central Glass Company of Japan. So I think from there he and Glenn had done some work in the DJ Basin in Colorado. I think that was called Highlands Natural Resources, and then he took I can't remember how it came about, but Brooks Energy wound up making over the Escalante power plant in New Mexico, which was a coal-fired power plant back in the day, which was a consumer of companies that I used to analyze, and they converted it over to hydrogen. And then they sold that project to that was called Tallgrass Energy, and that was sold to Blackstone, and that basically formed the seed capital of how he wound up trying to go after Total Helium. And this was you have to think about the timing of when Robert started acquiring land and stuff for this company. We were just coming out of the helium shortage in 2019. And the COVID in 2020 basically eliminated the shortage. Well, if nobody's going anywhere, we don't really need any of semiconductor manufacturing, just everybody's at home. So COVID sort of solved that, but once the economy got rolling again, the same sort of supply issues popped up again. Same sort of thing that we're dealing with in coal and natural gas and all across the energy metals spectrum. So I think for Robert, it's kind of just fortuitous timing. You leave one project, you begin a new one. But yeah, this is kind of Robert and Glenn Timpson, who've known each other for decades, getting back to their roots. Kind of doing some wildcat exploration in the Hugoton, and this time instead of focusing on natural gas, which is what they did last time, the focus this time is on helium because Robert's superpower is that he's a really excellent networker within the industrial space. He's met all of these folks either from the finance side or from the operating side over the years. A long time ago he formed a relationship with Lindy, and that's how he's able to bring them to the table this time. So for me, it's a really interesting story, and Robert's a really interesting person. And perfect guy to lead this kind of business.
Well, he seems to be in the right place at the right time. Pretty much through his entire career.
In my experience, that's a pretty common trait of very good entrepreneurs. They just always happen to be in the right place at the right time. So that's kind of how I came across it, and just what a nice and interesting person Robert was, kind of sort of sealed the deal, and so I went, okay, well let's go ahead and do this project. But that kind of brings us to what it is that we think about it, or I guess we can kind of move into either operational questions or how to think about owning a company like this and what to expect out of anyway. Just I don't know whatever you guys are most interested in. I'll jump into that vertical there.
Well, I think we discussed a bit earlier today exactly where we want to go with this, and we don't want to cover everything in one day. We want to have a couple of different meetings and let people kind of digest the information. And so we were looking at where the company is going and how you feel that what they're worth, basically, their market share, market value.
Yeah, we can talk about that. It's first off, it's an exploration company. Really, first and foremost, and they're sitting at basically the they're not really making any discoveries. I mean, we've explored the Hugoton Basin since the dawn of man here, so we know there's gas, we know there's helium, we know there's natural gas liquids in the basin, and we kind of know in what concentrations they are just in general. I mean, you can look through the Total Helium deck. There's a pardon me, I believe there's kind of a multicolored chart on there that talks about proven helium concentrations. I mean, this is well known. It's been out there for decades. But the one thing that you have to sort of understand about the Hugoton Basin is that, the center of it is where most of the natural gas exploration and production was done way back in the day, way back in the early to mid 1900s, kind of the dawn of, the U.S. Oil and gas industry. But as you move sort of out in concentric circles from the center, and I can probably just share my screen and show everyone. Try to get down here. Let me show you that. So let's try that. Can you see the Total Helium presentation?
It's coming up for me. I don't.
Can everybody see that?
It's working on it. There we are. Yep, I can see it. I don't know if everybody else can. I'm sure.
Hello.
Yep, you there?
Yeah, you were muted there.
Oh.
So you guys can see the screen?
Yeah. So So you have to type watch stream.
Okay.
Anyway.
All right. So my cursor here is at the center of the basin, where a lot of exploration has been done. But as you move out toward these outer rims, you get higher helium concentrations in general, but you also get a lot more water. So that's an important thing to sort of understand. When hang on one second. It's an important thing to understand with regard to the company, because that's really what Glenn Timson's expertise is in, right? He's a dewatering expert that has not only worked in wells in the Hugoton for a long time, but also has done a lot of that work in the Bakken Shale and some other places as well. So for a company like Total Helium, if you're going to drill in the Hugoton, you have to be able to handle the water, and that's what I think they have a really excellent plan for. So the way they have their operations kind of designed is they can kind of drill maybe 6 wells around one central saltwater disposal facility. So you can think of it as kind of a hub and spoke, right? So when they drill a saltwater disposal well, they know they can have 6 operations that they'll negotiate the specific locations for over time, and then you just go drill them one at a time and make sure the piping is hooked up so that the water goes to the well, and then the production goes into the pipe. Most all of that is below ground. They drove through and saw each of the operations probably couple of miles apiece from the central disposal well, and I think that spacing is pretty typical. So that's really what what Glenn brings to the table is they have a really solid plan for kind of a each operating unit, so to speak. So handling the water is not going to be a huge cost, and then also they get to this time around, especially if they get to the point where they can drill a lot of wells per year. They have a plan to actually capture the value of the offtake of helium, which unlike Exxon and all those companies did in the 70s. So now they get value from both streams, as it were.
Nice.
Mm-hmm.
So you're no longer sharing your screen, right?
No, yeah. I wanted to show the basin there and talk about how you get more water as you move out from the center, but you also get more helium, and so that's sort of important with regard to how to think about valuation of the. But is anyone familiar with kind of helium market dynamics or who produces what or anything like that? Do you think that's worth going through?
Well, I was thinking maybe we could go through the current status of operations, maybe, and your understanding of it.
Yeah, why don't I just take everybody through kind of how I put together the report and kind of the background information. I'll include global supply demand, and then I'll take you on through like how I set up the model and how I'm drawing it through. Would that be all right?
That sounds good.
Okay, so let me share my screen again. Let's do screens. We're going to do screen 4. Solution, okay.
All right, so again, everybody, you have to click on the watch stream, and then it should show up. Second.
So, yeah, if folks want to put in the chat, make sure they can see it.
Yeah, we can put that in the chat. Maybe we can do it after.
Either way, if somebody can't see something, make sure to put it in the chat so that the moderators know, and then they can instruct you on how to do it if you need it. I've got let me pull up the Fireside chat beta here so I can see it too. Okay, so let's start with market share. So let's go over here. So the global helium market share is really kind of equal parts these really large companies, right? So Air Liquide and APD and Linde are really the big three, and they're all about between 20 to 22% of the market. So, and then a handful of other ones. This is Math Dry Gas, and then Messer is here, and then Iwatani is the other sort of big producer, and then about 10% of the remainder of the production comes from other sources, other smaller sources, some national company, and those things. From a demand vertical perspective, everybody loves to talk about party balloons or whatever, but it falls into this category, right? So it's really a tiny fraction of the market. It's the one that we all interact with most often. In fact, helium prices were so high. Party City stock went down 60% in a day because they for helium so bad during the last quarter that they had a pretty massive loss. So, for a company like that consumes it, this is not such a great market. For companies that sell it like Linde, etc., generally doing pretty good. But really, here are the big verticals, right? So we use it for lifting, so big machinery, etc. Here's aerospace. Here's semiconductors. This is analytical and labs, and this is MRI. So the thing about helium demand, it's only growing a little bit. Are growing are semiconductors and aerospace, right?
Mm-hmm.
A little bit of growth in fiber optics, maybe a little bit of growth in analytical or laboratory applications, but this is really where the rubber. If you don't have helium, then you can't create a proper inert environment to conduct lithography stage of semiconductor manufacturing, and that has, in turn, that has national security implications. Intel, in particular, is slated to build a huge facility in Iowa over the coming years as a part of the drive to kind of reshore or nearshore manufacturing and semiconductors, specifically logic semiconductors, are of just vast, dire importance to the Department of Defense. So this is all in our best interest to kind of reshore, to reshore semis here. So from a supply demand perspective globally, so this is just by country, but the dotted line here is global demand, and I put Russia as a supplier on top to sort of illustrate how important they are to the market. Now, this shortage came about mostly because Gazprom's Amur plant in eastern Russia was slated to come online in this year, but instead the facility kind of blew up. And then on top of that, now we have sanctions coming out on Russia, vis-a-vis the Ukraine war. So this entire vertical of supply is in jeopardy. I know there was a Seeking Alpha article that came out the other day that talked about how helium prices are set to go back to to crash or whatever, but not if Russia's out of the market. If Russia is out, we are short, and even Qatar's third trains of LNG production post come on next year. Now we're talking maybe 2025. There's no way that the world can make up that demand if Russia's out of the market. Looking at it, just by region, the BLM, which used to be the main supplier, the Bureau of Land Storage Facility, is slated to completely be drawn out by 2024. And that's the other sort of side piece to the Total Helium business is Linde is contracting with them to build out a private replacement for this, former public Federal Reserve of helium. And if they are successful in doing that, which I suspect Linde will be, because they're the ones driving the bus there, Total Helium is going to be a strategic partner, a consulting partner within that, but they'll own 50% of the storage facility, as they develop it for them. So that storage facility could take place here, and I'll discuss valuations of that or ideas for how to go through. But there's no other supply anywhere in the world, and that's I think what that gentleman who wrote the article was really missing. Now in the U.S., we do have enough. Between the Bureau of Land Management, Exxon's production from Lafarge or other, and this is U.S. demand. The U.S. is okay; we're secure. But so really, the global the story for helium is more global in origin. And as spot prices continue to rise in the offshore markets, those will be reflected to some degree onshore here in the U.S. And then so I mean that's basically kind of the high level supply demand outlook for helium. So let me go ahead and start talking about how I put together. This is the single well model where I took, here is how much total gas is expected to be produced at 1,000 MCF per day, which is probably a pretty conservative estimate for where these wells will. And then I broke it up into helium per MCF, nat gas MCF, and keep in mind here, natural gas production is pretty important to the overall cash flow of the operation, right? And this is the bulk of what's going to come out of these wells. And if you looked at gas prices recently, insane, and they're going to get much higher, I think, as we get into summer and winter. Then we have ethane, propane, and then a combination of butanes and pentanes and hexanes and all those things. And I just summed all those up over here and taken an average price. But the revenues. So I have prices down here. The prices are drawn from this tab. So this is these are base case prices over here. This is the strip for Henry Hub, just as is. Current strip for ethane, propane, an average of everything else. This is Linde's offtake agreement with Total Helium, and spot prices for helium right now. From talking to industrial, they're somewhere between 1,000 to 3,000 per MCF. Just depends on who needs it and how much they're willing to pay. I've assumed that that's going to come back level of $400 per MCF by the time we get to 2025, which would give Linde basically a, somewhere between an 80 to 100% margin on their off Total Helium. I think that's pretty reasonable, but we can adjust it and kind of run scenarios if we want to later on. Mm-hmm. Right, but that's where the prices come from. We total up revenue just like that, and kind of subtract out the capex, subtract out the operating costs, which I have. Here's capex, land acquisition cost, estimated total capex per well. I broke out OPEX over here based off of interviews, OPEX from the well, the disposal well OPEX per year, variable water disposal, electricity, and I've just summed them up. With processing, not paying for gas processing, not paying for gathering and transportation. That is basically done by the folks who operate the pipeline. They take a small fee for that, and that's how they kind of share in the profits, and not a fee for helium processing because basically help them with that and take care of it. So only residue gas processing, only NGL processing. Those are the only charges that come out of that, and then severance tax. Have estimates for that going out. This is my inflation forecast. This year is going to average, I think, about 7.1. I've pulled it down to going back to 2% per year, at least 4 to 5. Could be longer, but Total Helium's offtake agreement is indexed to CPI. So the longer energy prices stay elevated, the more that Total Helium will be able to see for their offtake agreement with Linde. And that kind of gets me into, all right, well, so we drilled 2 wells, right? But we have 180 total sites that they could possibly go to. So they're not going to stop at 2. They're going to keep going. The first few, when a company moves into production, the first few wells that you drill are educational, shall we say, right?
Yes.
So you have to go in and you drill the well and you begin to frack or to stimulate the reserve, and usually that's done in stages. And so the first 2 are sort of helping set the learning curve, right? Every kind of regional deposit is a little bit different in how it's optimally stimulated. I think this last one, if I recall correctly from an interview, I think they started in the bottom zone and then moved maybe a little too quick to the top. And then they've had to go in and kind of replace submersible pump because the helium just couldn't get out it wasn't permeable enough to get out through the top of the last frac. So they pulled that out and they kind of re-engineered it and put it back in, and seems to be going well. I think we should have some information on that later on. I think they put a pump jack on it to begin the dewatering process. And of course, the more water that's pumped out of the well, the more flow we should have from a gas perspective. So, the dewatering process is real important there. But here, like how I approached kind of the valuation is I just took, here's, let me go to production scratch, right? So this is one typical well, and what, the gas output is assumed to be over the life of the operation, 10 years here. Mm-hmm. Not a big deal. And then said, okay, well, if we drill 1 well a year, we're going to get another profile that looks something like that in year 2, and year 3, and year 4, and so on, right? And then for OPEX, if this is the total, well, next year you're going to have to operate another well, and the year after that you're going to have to operate another well, and another well, and another well, so forth and so on. And here's the cumulative cost, operating cost. Did the same for processing, severance tax, etc. But the total cumulative cost that you could expect to come out, of the other side. So that's what these are. So we're drilling 1 well a year. There's the capex that's pulling from the capex sheet. Here's the cumulative operating cost going down through 2031. Here's the processing cost and the severance tax. And then all we're doing here is we're taking the revenue minus all of those things to get a feel for what gross EBITDA looks like. From there, here's my inflation calculation. So then we adjust all of these flows for inflation going forward. Here's the discount rate. So I can run this at 8% or 10% or 12%. Ran it at 8 here. for better or worse. I think it's a relatively low risk operation over the longer term. It's a very well defined basin. Labor rate comparatively low in Kansas relative to the country. So somebody looking for an 8% return, I think this is a pretty reasonable calculation. But drilling just one well a year, we get to a total value of about 17 million or thereabouts. That's 10 wells,
and we're not drilling one well a year, right? Like we know that, right?
Right. And so let's take a look at what that does to production and revenue. So production, if you're drilling just one well a year, look how levered to gas you are, right? And it's not until the out years that you actually you get to achieve some of the spot price of helium once you get up above that Lindy's offtake agreement of 1,000 per 1,000 MCF per month, right? So once you get over 12 a year, then you can start to capture the spot price a little. So, but most of the revenues. Yeah, go ahead.
And how many wells did we say that they say that we're going to do?
180 sites. So thus far, and they're going to, Robert's going to make additional land acquisitions.
Nice.
Yeah, I mean, they may buy other operations. There may be an opportunity to do, some. Hard to say, and I don't really speculate.
So you're breaking up there.
Oh, sorry. Can you hear me now?
Yeah.
I'll stay closer to the microphone. How's that? Anyway, Robert will have options to do other M&A, even outside the Hugoton, I suspect, but I don't really want to speculate about that here on the valuation itself. But look how much revenue is coming from nat gas. I mean, it's better than half. So if you're only drilling this many wells a year, you do have a helium operation. You're getting most of the money for gas. So let's take a look at what happens. We've already drilled 2 wells per year. Let's take a look at what happens when we take this and all the way out. So here, I've got a multiplier over here. So instead of drilling 1 well a year, we're doing 2. So the revenue doubles, but so does the cost, right? Mm-hmm. So there's the multiplier. This is pulling in, taking the OPEX cost, multiplying it by 2 wells per year, and then we're bringing in this cash flow here. Here's your gross EBITDA. Here's my inflation rate, and we're coming out at a value of about 37 million which is a little bit below where the stock price is right now. Mm-hmm. But we've drilled 2 wells, and we're still, they're still in the process of figuring out how to most efficiently drill them. If we've done that in 6 months, then it's safe to say that 4 wells per year is pretty reasonable. So when we do 4 wells per year, I get up to a valuation. This is just the same thing. Multiplier is 4 this time instead of 2. But I'm getting up to a total, discounted cash flow of around 84 million, which, relative to today's share price is about a 62% return. The limiting factors to drilling right now, aside from just the learning curve of how to most efficiently, frack these particular drilling sites, are labor. It's hard to find labor. I was out there, talked to the consulting firm that's drilling for them. They have some crews, so they can get folks, but it's hard to get rigs. It's hard for any oil and gas folk anywhere in the country to get any rig right now. Mm-hmm. In the Marcellus region, I think they're more constrained by labor. I think the rigs are more a problem, and I've heard a number of different sort of anecdotes about how difficult that is. But over time, we do expect the labor force to kind of come back to some degree, for labor availability to be there, even if that's just because of layoffs in other parts of the sector. Oil and gas and extractive resources. Extractive industries are really, they're going to be hiring. So, anybody who, loses their job at a construction site or something like that, they're going to be able to find work doing this kind of stuff. But, but here's, a really easy base case of just 4 wells per year, and a 62% return relative, and at a pretty straightforward methodology. But let's take a look at what happens now to the production. Now, there's a lot of natural gas production. Look at what happened to the revenue. Now, here's that helium offtake, right? Looks really small relative to the overall revenue. And look what happens to the spot helium. So now, when you can, really taking advantage of the near-term shortage, you can really start to jack up revenue in the out years when you have sort of some independence over that thing. So that's 4 wells per year. I think 16 is doable. By the time we get by the time the play matures a little bit, and 16 wells per year, total valuation looks 384 million. So it's a 6-bagger with regards to the current share price. And to be fair, I think this is achievable. So the difference between operating in Kansas and operating in some of the rest of the other parts of the country is just the ability to get permits. You can actually walk into the permitting office in Kansas in the morning and have a permit to drill by the end of the day. So, the bureaucracy that would normally, stand in the way of, drilling and completion in Colorado or, in some, in Ohio even, or some, even some other conservative states, just doesn't exist in Kansas. So really here, the limiting factor is, understanding what the engineering looks like, and then labor and rigs. And, as long as you can take care of those 3 things, I think this is a very achievable goal. The max I think they can do. Also keep in mind that this 16 wells per year, by the time you get to, that's 160 wells total. You haven't even gone through, well sites that Robert and Glenn have staked out. So, it takes about, so the consultants told me that it takes about 2 weeks basically to drill a well. So if that's kind of how we're thinking about it, we're not done. That kind of maxes out at 24 wells per year per crew, right? So this is probably, under that assumption, probably a little bit optimal, a little bit rosy, but it's totally justifiable to have some $600 million valuation once they prove the concept that that these wells are going to be commercial. It takes X amount of time to bring them on, but getting up to $7 a share is certainly not out of the question at all. And then if you start
these numbers are
hiring, if you start to moving on to doing multiple rigs at a time, well, then you can really get some interesting numbers. But that's the model basically that I built for it.
Those are all dollars too, right?
What's that?
Those figures are all US dollars too, right?
Yeah, I did everything in US dollars, everything in MCF. So, but that's the approach that I took to them. I think if you understand how one well operates in the region, the other wells that you drill are going to be some kind of analog of that, right? So, I think that's probably the easiest way to sort of think about them. And then, where's the funding going to come? Linde is paying up front for helium production. So, every well that they drill, it's basically Linde that's funding their exploration program, which is not something that you see in a lot of other small cap explorcos at all. I mean, it's a pretty rare bird.
That's pretty smart.
Well, that's what you get when you have, an executive who make those kinds of industrial connections, over the course of his career, and is somebody, quite frankly, that people. So, but that's for better or worse. I think that's how I'm sort of thinking about it. I did not tackle the storage facility. The storage. Go ahead. Sorry.
No, we didn't. Do you want to tackle that, or do you want to move into some questions?
Yeah, we got 15 minutes or so. Yeah, why don't we take some questions, and then if one of those questions happens to be about the facility.
Yeah.
But yeah, folks, any questions you got, go ahead and type it in the chat, and I'll be happy to try to address it as best as I can. See, somebody's typing.
Yeah, we got a couple people typing here. They definitely type just as fast as I do. Yeah, so David's right. If typing the question will take too long, we can unmute your mic and you can just go ahead and talk to Matt.
Yeah, is there a function whereby somebody can like raise their hand or something or type in?
Yeah, I can, let me see here, close stream.
How long is the agreement with Lindy for? I don't know offhand. I mean, it's not in perpetuity, but it's a few years at least. And they were when I was out there, they were actually present. It's pretty clear they have a good working relationship with each other. So
Nice.
So, and honestly,
yeah, so this is the first time we've done it, so we're trying to figure it out as we go as well. I mean, we couldn't think of everything, right? But let's say Golden School wants to know about the storage, so yeah, have at her.
Do you think other industrial gas suppliers will look to do something similar? I haven't heard tell of anybody thinking, looking at doing that right now. I prepared a chart of share price per year. No. Small cap companies like this largely trade on news, right? So, literally nobody in the market appreciates the fact that, for better or worse, Total Helium right now is a natural gas company. Until they hit, critical mass on helium production, they should be trading alongside natural gas. And, at least from my perspective, I wouldn't be $20 per MCF this fall. We have less in storage this year relative. The backup for natural gas is coal-fired power plants. Coal stockpiles are 30% lower, and production is only, I think, like 260 BCF higher. We're going to be in bad shape, globally, and I think that arbitrage will close. I think Europe gas is $36 per MCF. So, that benefits Total Helium in that they're going to be able to make more money off the nat gas selling it at spot per revenue. But I think that's one of the sort of like narrative verticals that that probably need to work its way out into the market for people to realize, because it's a small cap Explorco natural gas company, and there are funds, convexity and torque with regard to natural gas. So. So, for me, it's a kind of interesting first few years, I think, for the development. Other industrial gas suppliers don't think are looking to do something similar. However, you have to understand how those industrial gas suppliers think, right? Like, the reason that Linde has because they know they're not an explorer, they're certainly not a producer. So they would rather partner with somebody in region that does have expertise, that can actually deliver on a drilling and completion plan, and just let them produce the helium for them. That's vertically integrating downstream consumers of or brokers of usually doesn't work out well in any industry. So storage. Let's talk about storage for a second. So the way that I understand it, and I'm not going to explain this as eloquently as Robert certainly could. But the storage, as I understand it, there needs to be a place to store excess reserves, because we clearly have supply issues within the industry itself. So any sort of period of production, right, which we're probably going to have if guts are coming back online, and then if Russia ever comes back to the market, we are going to have a new oversupply. So it's important to be able to buy that gas and put it somewhere so that when the next shortage comes, and it always does, since those supply constraints, then at least we have a facility to ship out into the market rather than sure. So if you can imagine importing helium from Russia and storing it in that facility, and then charging those companies a fee for storage, so that they can do last mile delivery. I think that's that is a business model that could be replicated throughout the world. So it's an insurance facility basically, right? And I've talked to a couple of other folks who, have been involved in either natural gas storage or, other businesses that are similar over the years. And, for the kinds of volumes, I think that about something like, in the $5 to $10 million range, possibly up to that level. I can't remember if it was what the period was, but tack an extra, call it $10 million per year times, a multiple for an insurance, something like X. So you're tacking another, at the very least, possibly more.
You're breaking up pretty good.
Oh, I said, if you're making about 10 million, per year on that, the multiple for, for a storage company like that would be somewhere up in the 10 range. So, tack on an extra $100 million onto the value. And if you do it at size, then you get, then that 10 million figure I quoted becomes higher. I don't know how big it's going to be because it sort of doesn't exist yet, but I think that's probably a minimum. Will these gases be used by Praxair? I mean, if Praxair buys the helium from Linde, yeah.
Now, with the whole storage facility, does that effectively help Total Helium sort of control the price of helium that way?
I mean, it helps Linde control the price of helium. I think Total Helium will be in the business of engineering and designing the storage facility and of producing helium and selling it, or alternately into the, populating the facility itself. I think that's mostly what they're going to be focused on.
Gotcha.
Any other questions from folks out there?
Looks like Golden School's typing.
Yeah. And if it's too long to type, if you just want to put a question mark in there, we can unmute your mic and you can just ask it in person. Jim, did you have any questions while we're waiting?
Golden School does have a question.
Okay. Yeah, you can go ahead and unmute that mic.
Mm-hmm.
Can you do that, Jim?
I'm trying.
Wrong one, looks like. Oh, no, that's you. Sorry.
Sorry?
That was your avatar that didn't have the mute on.
Yeah. Oh,
yeah, Golden School, if you can tap your mute button now at the bottom of the Discord the chat view, then you should be able to unmute and say hey. Not working?
Doesn't look like it.
Oh, well.
Depends where he is, too.
Fair enough.
He's typing.
Yeah, so that, anyway, in the meantime, if you have any other questions or something that you want to talk about, happy to sort of have a think on it with you live here.
I'll be running into a little issue here. Folks not quite understanding how to work Discord, but so at Golden School, if you would, sir, if you just tap that control for your the voice channel, and then look for that microphone and tap it, and it should unmute now.
Technology, eh?
Yeah, that's all right.
It works great when it works properly.
Yeah, that's right. But yeah, it's this has been a really interesting and fun project for me to work on. I've really enjoyed getting. When I was out there, I met his new head of investor relations, great guy. Saw them last week for some meetings in Baltimore with folks. So it's just really been a pleasure to, not only get to dig into a market, but kind of, take a look transition from idea to implementation and production. I remember, that's the kind of stuff that's always been interesting to me since I started natural path.
And just so everybody knows that we do have just an absolute ton of stuff to cover too, right?
Yeah,
we just don't want to cover it all in one day. That's all.
Yeah, I mean, we didn't really get into effects of the knock-on effects of Russia and Ukraine. How a shortage of helium might back up through not just the semiconductor industry, but if we're short on semis, I don't think we will be at this junction, but if we're short on semiconductors, we know from last year that auto production, which in turn has a knock-on effect on steel demand, which can affect what tube and pipe prices are. That's being a supply chain analyst here in the during and after the pandemic has proven. Just say mine. I get a lot of phone calls asking about those kind of connections between commodities and world events.
Looks like Dero is typing a message or a question.
Yeah.
Yeah, so we're going to have to touch base before the next meeting and set an itinerary. There he is.
Outside of Party City investors, here we go. The helium shortage seems to be relatively unknown. At what point do you think that the shortage will become more known to the general? To be honest, it probably won't. It's just not. From what I understand, semiconductor manufacturers see, an effect where helium in incredibly short supply for them. But the truth is, they're such an important client of delivery over companies like. So if you're Lindy and you have the choice to supply Intel or supply Party City, one of these guys is 20% of your helium book, and the other guy is 2%. It's pretty easy to prioritize which one's going to get the product. So I think it's going to be kind of a fringe story to the general markets more so than one going to grab headline. I do think it is interesting enough to warrant media coverage, right? So media loves to run stories about, well, we know we're short on natural, we're short on coal, but did you know we're also short on helium? That's crazy. We've seen those stories in the past. Sometimes that does well, you'll see it in traditional media. But I think where the story may be more interesting to traditional forward is not necessarily like how how helium functions in and of itself. It's how important it is to aerospace and defense, and how important semis. That's really what I think is going to be relevant to publications like Scientific American, other other kind of magazines or media like that. I think that's what people are going to be interested in talking about. Why are we short on helium, and then into this. I think that's the thing that if the helium story ever goes viral, it'll be because of the knock one of those other verticals. But
the funny thing is that everybody notices that the balloons aren't being filled up, and the reality is that it is such a small part of the market that if that's being affected, there has to be a shortage, right? Regardless of what somebody writes.
I walked into on my lunch break. I went down to Hallmark to pick up a cart, and the big sign out front, no helium, sorry. So
was it helium-filled balloons?
Yeah, right. What price is the natural gas and volume profitable? It's on a price basis, it's profitable now, but I think probably the better question is productivity level. Is the natural gas and volume profit? I think at about 400 to that's probably where it's going to pardon me. That's probably where it's going to start to make a dent. But again, remember, Total Helium's getting paid in advance to do all this. So there's it's a little different arrangement, I think, than other helium companies. But I'd say when the wells get up to, call it around 400, 500 MCF per day, I think that's when they'll start cooking. But natural gas prices are. I mean, this is going to be. I think this is going to be a pretty intense couple of years for natural gas. But as to when to expect that, I think we should. They just put the pump jack on to water the Miller well. So I want to say we should see. There may be some progress toward. So that was last week. It's been a week since. So should hear something about flow rates 2-3 weeks.
Nice.
So you have to remember too. I think that's part of the reason why Dan's on. So I think there will be kind of more communication going forward. Not necessarily press releases, but it's like I've told other clients. The process of building a business is of interest to a lot of people, and there are a lot of ways to communicate. Kind of the daily goings on in a way that are especially to shareholders. I mean, that's why you guys have the Discord. You're trying to generate interest in a company. You want to be excited about it, and you want to be have a seat at the table, so to speak, as to how things are sort of progressing. We got another question here. Do I think that Total Helium share the cost of the facility will be funded by Linde via another helium offtake agreement, thereby preventing a capital raise? No, I mean, I think that's. I think, as I recall, Total Helium is being paid as a with that particular project. So they just get paid to do the analysis and the work on. So the capital raise, the capital raise itself, I'm not sure they'll necessarily have to do just because offtake. So might they in the future? I mean, yeah, if they were going to do an M&A that kind of materially transform the company, I think that would be reasonable to go out to the market and see about that. But as far as I know, that's there are always some smaller things that are being talked about, but as far as I know, that's not on the table right now. Did that answer your question? I mean, just let me know if it didn't. Oh, okay, great, no problem. And if you hear those beepings in the background, that is another Discord on. Will they store helium from other producers? Yes, absolutely. I mean, if you can imagine a facility not just store gas that Total Helium produces, but also from other producers in region. From if we wanted to import gas from guts to release into the market, during the next shortage to prevent a force majeure, like that's something that's a possibility too. Like, I think the lesson that we've learned. 4 separate helium shortage. Oh, there are a lot of small helium producers in Kansas that could absolutely store in there, or alternately sell to Linde, and then Linde can store it there because they own the facility. But I forget where I was going there when that other question came in. But hope that makes sense. Mm-hmm. Looks like we got another question coming up.
Yes, sir.
I will sit here and wait patiently and diligently for it.
Yeah, and that you should.
Yeah, but the idea about the storage facility is basically to try to prevent these shortages from happening. Okay, so Linde owns the facility, not Total. I think it's 50-50. I think it'll be 50-50. Yeah, I think that's in their deck. Let me see. Due to critical need for helium shortage. Yep. Thank you. Thanks, David. I appreciate it. Yeah. So yeah, that's I guess the thing to sort of take note of with that would be regarding the storage. Part of the reason we keep winding up in these situations, things go wrong. And, we're in this supply chain where last minute delivery is, the norm. But, the BLM facility serviced the industry when those outages, and we can't, operate in an, barely producing the amount that we consume. And especially given that it's a byproduct, of natural gas production, it doesn't always drive primary wellhead economics. So the fact that, Robert and Total Helium are purposefully targeting it, purposefully opening up a facility sort of means that if successfully executed, there won't be helium shortages in the future, which, isn't even necessarily bearish for price. It's just more stable. So you don't go from $400 to $2,000 and then back to $400. It's just steady sort of cost plus pricing mechanism.
Basically, a very important or integral part of North America, really.
Yeah.
Keep everything going and running in the right direction.
Right. And so, going forward, like if they're successful in building this, pardon me, and helium prices stabilize in kind of like range, then the variable sort of more volatile component of Total Helium's valuation becomes natural gas. So then it really can sort of price like a 50% natural gas company. So should be like at that point, there should be enough liquidity in the market where stock trades sort of at a small beta to Henry Hub.
I think we got time for maybe one, maybe two questions, and then we'll have to cut her short or call her a day.
Yeah, but that includes the mods. If the mods have any questions, and I certainly there might be a chance where I might not be able to answer everything. If there's something where I don't know the answer to, but I can go dig it up for the next one too.
Yeah.
All right. David says something worth mentioning is the reason for a lot of the shortage issue. Right. Therefore, helium market is moving solely toward September 22 should complete the drawdown on that government reserve. Yes, that was on the supply demand chart that I had. There's a little sliver of light blue that came to an end. I think it was 2024 when it finally absolutely closes, but it's a negligible control here at this point in time. So I think that law was passed in 1996. It was during the Clinton administration.
Yeah.
Federal government's not going to pay for this. Private market should do it. Will excess be sold to BLM? I don't think so. There's a chance that the facility may get repurposed or something like that. I think the BLM is out as of 2020, somewhere between this year and 2024. But that closure and drawdown means that there is the potential for additional volatility in helium market, not a supply shortages. That's what David was saying with his comment there, and I agree. That's pretty much it.
Kind of funny that they actually that the Clinton administration did that in the first place. It seems a bit odd, but
yeah. Well, I mean, I'm a Democrat, but I'm also a huge proponent of efficient government, and if the private market can deliver these, and Total Helium knows that. So if I don't think there's any reason why they're successful. Cash positions around 2.4 billion. So if you can imagine either kind of a situation where they're going to pay a premium to acquire Total Helium, that's certainly within the cards, right? Would you pay to acquire them at a valuation commensurate with, drilling eight wells per year, 16, which would essentially be the equivalent of call it $2 share price versus like a $4.50, $4.60 share price relative to the current count. That's I think that's in Lindy's could be in Lindy's best interest. But
Makes sense.
yeah, I mean, there's a lot of potential for just a lot of different directions for development over time. And Robert's such a seasoned professional that I would pass him if we saw additional accretive acquisitions on down the road.
Well, you know what? I'm excited to stick around and wait and see what happens because
yeah, well, that's really the trick, right? I mean,
he really knows what he's doing, right? Like,
yeah, he does, and also like I've owned enough exploration companies over the years. The frustrations that kind of go along. It's like when there's a lot of news, share price goes way up. But when you're in either a period of development, when there's just not much to report, especially if you're a smaller micro cap company like Total Helium is. I mean, it's the only volume that comes into Total Helium is a pretty low flow company is sales. People looking to either take profit, to go the other way on it. But I could probably let me try to find one. I could probably find this is a good kind of idea to sort of end on. So let me look for AOI star AOI T to do. We go to max. All right. So I'm going to pull this over onto another screen. I'm going to share one more time here, which I think is pretty interesting. So let me see. Is this it? AOI. Here we go. Let's go back. Hang on. Screen. All right. So this is, let me know if you guys watch the stream. Make sure you can see it. Jim, can you see it okay?
it's coming up. Yeah, here it is here now. Africa Oil Corp.
You there?
Yep.
I pulled up a company called Africa Oil. Kenya, Shell, a discovery in offshore Africa as well. But this is an exploration company that really didn't produce here. So, you're looking through, well, what's this all about? This action right here. Well, this is the oil price run up in, from 2005 to 2008 before the global financial crisis, right? What's this move right here? This is probably getting picked up by either the announcement of the project of the discovery itself, and then getting picked up by media and newsletter coverage. And then look what happened after that. So, like, this is very typical of exploration companies. So there are two things that happen. One is like when there's news, we go up here, exploring, we go way down here. Africa Oil's been waiting on a pipeline to be built in Kenya for a long time. I covered them here in June 2017 at like $1.91 Canadian for my brilliance by declining off about 94 cents, 50% drawdown. But the point being is that they're producing now. They're actually generating cash flow, and if you're going to own an exploration company, you have to allow time for the play or the company to develop. So it's not, it's not a 4-year horizon. I mean, you have owning, sometimes 5 years, sometimes 10 years. I mean, it takes a long time for those things to develop. And, the most important thing that I tell, I've written for financial posts. If it's a company that you're really keen on, never try never to buy all at once. You want to buy small increments, a few basis points at a time over a long period of time. Average in at a price that is representative of, the long-term share price, not, certainly not the top of the market. If you think about investing in your 401k too, how do you do that? Well, no, you work a little bit, and then every month there's distribution. You buy, an allocation of, 5 or 6 or 10 ETFs or whatever. Like the same approach you absolutely have to take for exploration companies, and you have to be patient with them to develop. And the best way to sort of think about, whether, my friend Rick Roll from Sprott talks about answering unanswered questions. That's what exploration is all about. So the thesis is, Total Helium will be able to, build out these wells and execute on them over the period of, say, 4 to 5 years. And during that time, we may make some acquisitions that'll be lucrative to the company. We're going to see first cash flow, all those sorts of things. And then what the company will do over the course, prove your thesis right, or they'll prove your thesis wrong. Mm-hmm. But you can't prove anything right or wrong 6 months, a year, those sorts of things. Like, you just have to be patient and allow companies to develop. This is the extractive industry is very, very hard, and it requires a lot of patience. Both from the entrepreneurs who are building the companies themselves and from the investors who accompany. So, if there's one thing that I had to say to folks, it'd be just be patient. If the company will answer your question, it's going to be a 20 bagger or a 10 bagger in due course over time. And otherwise, if something doesn't work on the production side, or it doesn't work, as far as exploration, or a relationship breaks down over time, like those things all happen. But, then there will be another question. Can it be, can you get to the other side of it? In my experience, when the questions are answered, and they're answered in the affirmative, then that's when you really get rewarded. So that's where it falls back to the company. I guess I kind of rambled there a little bit, but you sort of get the picture. It's a long, slow process to build these companies. None of them were built overnight.
Well, and that's part of investing, right? It doesn't happen overnight, and I think the last, I would say, year and a half, 2 years, people have seen huge gains and come to expect massive returns almost instantly, and that's just not the case, right?
Yeah, and you have to think about like the broader macro implications. So, what happened over the government handed out big checks to people, and then they went and spent it on stocks and cryptocurrencies and all sorts of stuff. Yeah, all sorts of speculative instruments. So, and the government isn't handing out checks to people anymore. So the sheer volume of stuff that has been traded is going to go down over time. So, this is why it's incredibly incumbent on the companies themselves to generate free cash flow. And then, when the time comes to talk about it in an earnings, which, certainly over the next few years, I think Total Helium will be doing, you have to stick your chest out and talk about how you're proud of it. That's how and why people, pay attention. So, like I said, it's a long process. The time horizon on this one is I'm looking 3 to 5 years at least. That's, if I didn't think they weren't going to be able to do it, I wouldn't be sitting here having this call with you.
Exactly. So, well, thank you very much, Matt.
Matt, one quick question for the folks that may be having some questions with what you're doing for Recon Africa. So, is it safe to say that kind of the models that you're putting forth that you showed us today on Total Helium and some of the general market conditions and things like that is more the focus of what you're doing for Recon Africa?
Yeah, so I don't have to go through and do like a deep dive on the oil and gas industry to learn it like I did this one. I've, either worked, adjacent to or, on for long. The things that I'm really, and that I try to bring to discuss how companies, like Total Helium kind of fit into the wider world, right? So why is Total Helium important? They're replacing, hopefully, a storage facility that the government used to run with a private one because, a big downstream company doesn't specialize in the development of those. Here we have a big company helping a small company do something that is necessary for the world, not just the States. Like, I think that is a fascinating story that a lot of people would like to hear about, not just, investors, but, right? And then, if we think about, when we think about Recon, I know everybody knows the largest, onshore, hopefully, will turn into, from a speculation into a discovery over the course of the next few months. But how, if they are successful, in the drilling program, which I'm going to fairly soon, how are they, what's the end goal? You always have to know where the destination is, for a company, right? So if, in Recon Africa's case, they've done research now. So they had the Aeromag study. They took a chance on a couple of wells there. They know that they're get something. They have 2D seismic now. They're going to go try and drill a well with better data, with more information on where they can. And they've already completed another round of 2D seismic that's complementary to the one is. If you think about it from a news perspective, well is about to be stratigraphic wells about. We're going to get results from those over the course of a few months, and then I think it took Netherlands Sewell about months or so to complete the last 2D seismic study. Now we're going to get another one. It's all about gathering data, right? And the data itself can tell the story of why the research is important. But somebody who's not a geologist or who's not a an oil and gas analyst may not necessarily understand why that's important. So trying to find ways to sort of help with narrative, help explain why it's important that near site P33 the little fuzziness that kind of happens in the middle of may in fact be a reservoir and active petroleum system. You're not going to know that if you're not if you don't do that sort of work. But now it gives the company more data as to where they can stick the straw in the ground and try to find something to reserve. That's the next stage. Prove the discovery. And like I said, for Total Helium, the onus is on the company to go, right, and then to show the work and be proud of it, and to be transparent and accountable. Because you think about sometimes exploration programs are wildly successful, sometimes they're moderately successful, and sometimes you get not great results. But it's the average of those things and the gathering of data and what not to do that I think is the story that shareholders and media. It's we are so underexplored for every critical material on the planet over the next 10 years. That I can't stress or sort of underline and underscore how important the work that both of these companies are doing really is. We're going to have to. Russia's told us basically here in the last 3 months that we're going to have to produce hydrocarbons and critical materials in other places in the world, in friendlier jurisdictions, and there just aren't many people out there doing that work. Certainly, that's why I'm interested in it. But telling the story of how these small companies kind of fit into that network, or that potential global market, I think is really important to convey to everyone. So does that kind of make sense as to why I'm kind of doing what I'm doing and the types of formats which it'll show up in? It'll show up in themselves, or how they talk about certain news releases, or maybe I'll write a market report specifically on light oil, whereby they can really accurately articulate exactly what the plan is if we do go to commercial, right? Those kinds of things you always have to have an answer, because if you're not prepared, any one of the verticals, boy, it can catch up to you real fast.
I think I got most of that. I'm having I don't know if it's my internet connection or if it's yours, but having a lot of cutting in and out on that. But so yeah, it makes perfect sense as to the need to kind of interpret what is being put out there and provided in a technical, on a technical platform to folks that can understand that right. Don't do that for a living, so.
Yeah, exactly. And if you think about it from a, from a fun perspective too, right? Like, both companies are probably too small to be a lot of.
Yeah, it's your internet connection, Matt.
Oh, great. Okay. Well, can you hear me okay now?
Well, it's very sporadic.
Here, let me tell you what I can do. I don't need to share anything else. I'll just I'll close it out by joining, and let me close out this, and I'll jump in here because I think I can walk to a better area.
And then too, Jim, you might want to just close your mic so that maybe you're not overriding him at some point. Just mute yours when he's speaking.
No problem.
So find your one here. Golden rule. So I'm going to close out of this and then join on the other one. Excuse me and hang on. All right. Let me hit. Can you guys hear me now?
Yeah, that seems to be coming in okay.
Okay, let me get over to the other side of the house where the where the router is. Can you guys hear me now?
Yeah, it seems to be okay so far. I'll let you know.
Clear now.
All right, sounds good. I think proximity to microphone was mostly doing that, but So I guess, was there something that you didn't really hear, or something that you needed me to sort of retell or expand on? I'm happy to do that here while its reception's better.
David?
Yeah, I mean, maybe just the more on the kind of telling the narrative and the reason why it needs to get out there, so that the non-technical folks that do want to invest in these opportunities understand what the opportunity is all about.
Right. Both Total Helium and Recon Africa even are probably a little bit too small for the larger sorts of funds to hold, right? So, BlackRock's and Fidelity's, like, to get those guys into a fund at like a 1% position, it could soak up, half of Recon's market cap. So, it's not necessarily an appropriate vehicle for the big funds yet, right? However, most small funds and RIAs are also kind of generalists and not necessarily technical folks at all. So, a lot of the material that that I've written for Total Helium, that I'm going to write for, or contribute to Recon Africa, is also appropriate to market to try to get into smaller funds like that. Who do understand that investing in Explorcos is a 4 to 5 year, sometimes a 10-year time horizon. But if they don't understand why the deposit's important, or how it's going to, fit into the world once it comes into production, then, it's hard to get people motivated to own it. You know what I mean? So I think that story, the size story, was told very well, in those articles that I saw, about Recon coming out last year, and the drilling results were pretty good. They weren't like, didn't set the world on fire or anything, but it was clear that there's oil there, and that they needed to do more work to determine exactly where to drill so that they can prove up reserves, right? That's the next stage. The next stage for Total Helium is production. So they're in the process of making that transition now. But that's telling that story of making the transition from exploration to discovery, or for Total Helium's perspective, from idea to production. These are the most critically important times in the company's development. And this is when, both from a communication perspective, and from a narrative perspective, like, you have to go out and you have to evangelize why your business is important, and why people should pay attention to it. Me selfishly, I think that people should pay attention to oil and gas because it's not going anywhere, right? And we don't have enough. The market's telling us we don't have enough right now. And we need to explore in more places that are going to be friendly to Western nations. Namibia is certainly one of them. We need to explore for more helium because we have these supply shortages. That's what Robert's doing. Otherwise, could be short semiconductors. We could be short. It could have a knock on effect on the auto industry if we allow it to continue down this path. So, I think the work that these guys are doing is really important, and I think that story is important to communicate to folks. And I hope that in the process of doing that, we can broaden the shareholder base. And try to encourage some new people to participate as well. I mean, that's the idea anyway.
Well, Matt, we surely appreciate that little added insight to the conversation. I think if no one else has any questions, we can probably let Jim wrap things up.
Yeah, that's fine. Guys, thanks again for having me on. I really appreciate the chance to do it. And of course, anytime you guys want to do this again, just let me know. I mean, we can make it probably pretty regular. I think I'm in pretty regular touch with the guys, and there may be things that evolve in the natural gas market in particular, or in the helium market that may be worth discussing as well. So.
Yeah, well, that I'd like to do this on a very regular or a somewhat regular basis, and we, as I mentioned before, we do have a lot to get through, right? So, yeah.
Yeah, well, we did manage to cover a lot of ground today, but like I said, we haven't talked about knock-on effects of Russia and Ukraine, or how within the semiconductor industry helium is used and why it's important. You can probably find a couple of contacts of mine that are in the industry that might be able to talk to that. And there's a lot of kind of interesting side topics, I think, that are important for people to understand the overall investment, right?
Well, and this is going to mature and evolve as well, right? So, yeah. And I have ideas too that we're hopefully for the investors here that are present and watch this in the future. We have been going over ideas as to bringing other people in as well. So, I look forward to chatting with you probably later tomorrow, or well, maybe not tomorrow, but shortly. And we can set something up again.
That sounds great. But thanks to you guys, and thanks to everybody who's listening in. I appreciate the questions, and it's fun. Let's do it again soon.
Yeah, thanks to everybody for popping in and listening to us have at her. And Matt, thank you very much for coming in and shedding some much needed light on the situation.
My pleasure. We will talk again soon.
Take care.